Welcome everyone. Welcome to this week's Market Wrap. I have with me Mr. Pankaj Pandey, and once again, this was a red week for the markets, especially Friday. I think Wednesdays and Thursdays were rather sideways, but then came Friday, and we saw a big dip. What is happening, sir? Let's get the market outlook out of the way first.
Hi, good evening, Vishu. Yes, another brutal week for the markets. See, what we have seen this week is Nifty down about 3 odd percent to about 22,120 kind of levels. The broader market, especially mid caps and small caps, the decline was even more steeper at 5% odd. A sector like IT plunged about 8 odd percent in this week. See, what has happened is that while we have seen very quiet expiries, especially at the benchmark level, but this Trump tariff driven anxiety, I think with the Trump mentioning that he is going to persist with this 25% kind of a tariff on both Mexico and Canada, and another 10% duty on China has actually riled the market. So I think we're clearly seeing a downward or accelerated downward movement in the stock. And as a result of that, 22,800, which was considered to be a support, was easily breached. And our sense is that further weakness is going to be there because I think while these tariffs are going to be levied from 4th of March, but you still have news flows regarding in terms of a 20-25% kind of a duty on EU. Plus, we don't know how the negotiations will pan out. So a lot of unknowns or anxieties is going to sort of persist, and which is why it is very difficult to call in terms of when the selling will start. But one sense is that, see, up till now, the US markets have been doing very well, largely because the money has been sort of going to US, both bonds and equities. And but our sense is that for FIs to sort of make a comeback, the US markets need to witness some bit of a correction. And we are already seeing some signs of it. We've seen their 10-year yields cooling by about 30 bips to about 4.25. We are no longer seeing dollar index inching up, so it's been there at about 107 for past second consecutive month. Then I think the dollar, the overall sense is that there is a consumer confidence weakness in the U.S. economy, and which is why it is expected that possibly the growth rates also could taper off there, because it cannot happen that the U.S. levies so much of a tariff and they do not get impacted in terms of higher inflation, and which is where I think somewhere down the line the market will make its bottom. But that process could take some months, so it is very difficult to sort of say because Trump has been sort of quite vocal, and it's very difficult to figure out in terms of what he's going to sort of do next. But having said that, like I said, if we see a correction in the US market, then possibly that could make FIs to sort of come back. But that process could take some time. Uh, Parallelly, our markets are in an extremely oversold territory. I think at the lowest level since 2002. You have about 8 to 9% of the stocks within, say, Nifty 500, which are about, say, 50-day or 200-day simple moving average. So quite a sort of a bearish extreme. So from that perspective, some bit of a technical pullback can be expected, but still early days to say that we are seeing a trend reversal. I think for that, a lot of water still needs to pass through. So I think volatility is here to stay for some period of time.
Absolutely, sir. Let's talk about IT for a moment because I think IT has seen quite a bit of beating recently, and especially today as we speak, I think it was down nearly 4+%. So, why so much bearishness on IT stocks?
Oh yes. So while services is not part of the tariff, but IT does get impacted. In the last 1 month, IT index is down about 12 odd percent. Like you highlighted this week or today itself, we are down about 4.5%. At least most of the tier one names. See, one is the US consumer sentiment is at a 15-month low. So it is signaling a potential slowdown in the economy. And whenever the US economy weakens, the IT spending, especially in the retail side, sort of takes a hit. The other is that overall, if the tariffs are going to be there, then which means that the inflation is going to be higher, which means that if borrowing cost is going to be higher for corporates, they may cut down on discretionary spending. Another factor which is sort of impacting is that there are more fears of austerity measures under the Trump administration, because Elon Musk is driving the Department of Government Efficiency, and which will look to sort of cut a lot of federal spending. Now, this obviously could hurt Indian companies which rely on US government contracts. And I think FIs also have been sort of a bit negative on IT as a stock. So while the rupee depreciation is of a help, but the overall combination of a slowing US economy along with the kind of selling what we see from FIs, I think has impacted the IT space. So IT space could take some time to come back. And mind you, when you look at the tier one names, their dollar revenue growth is going to be say from 5.5 or 6% to about 9% over the next 2 years. So that is also not going to help in a big way. So I think weakness probably is going to persist in IT for some time.
Absolutely. I think this week RBI has also announced some relaxations in the financial sector, especially the NBFCs and MFIs. What is happening this, and how do we take this news?
I think should be taken very positively, largely because see what has happened is that RBI has previously taken a number of measures to slow down growth in the unsecured segment, and that had impacted the growth, especially say unsecured loan segment, which used to grow in double digits, had come down in single digits. And so from that perspective, it's a structural positive move from RBI because RBI has been taking measures on the liquidity side. And then what they've also done is that while they have announced a 25 bips kind of a repo rate cut, what they've also deferred is the LCR norm, so which would have impacted the earnings of bank. Now, on top of it, RBI has come up with the new measures. So what they have done is that they have lowered the risk weightages for bank lending to NBFCs by about 25 bips. So what had happened was earlier it was 20%, which was hiked to about 45%. And now it has been brought down to again 20%. Similarly for the other segments or MFIs as well. Now, what it does is that it releases or frees up the capital to the tune of about 35 to 40,000 odd crores. And positive for both NBFCs because and MFIs because NBFCs has been sort of struggling with higher cost of funds. And this move is definitely going to help because NBFCs are the last mile lenders. So from that perspective, it is a very positive move. And I think it does benefit segments like say Bandhan Bank. Bandhan Bank has got a good exposure of about MFI exposure of about 42% of their advances. Then you have IndusInd Bank about 9 odd percent or RBL Bank about 7 odd percent. Now, there was an expectation or there was some confusion that the weightages for personal loan and credit cards have also been lowered. But actually, that is not the case. So that still stays at about 125% for personal loans and about 150 for credit cards. So yes, it's a positive move from the regulator, and I think they are looking to sort of unwind a lot of measures that they had taken earlier.
Right. While we're talking about finances, let's talk about banks as well. I think they had been under pressure up until recently. How is the picture looking like now?
So overall, banks, our sense is that from April onwards, things will start becoming better for banks. See, at this point in time, most of the banks have seen margin pressure to the tune of about 12 to 15 odd pips, and with the deposit rate on a higher side. Now, with the overall measures taken on the liquidity side, our sense is that going forward, further rate cuts is very much possible, especially in the April policy. And which is why we would feel that the transmission is going to happen. But initially, it is going to be beneficial for NBFCs, followed by banks.
Absolutely. Any favored picks in this sector?
I think since it is these measures are positive for NBFCs and banks, so I'll name two NBFCs and two banks which are positive. So one is Kotak Bank. I think Kotak Bank, one, the valuations have become attractive. ROA is expected to be about 2.2 odd percent. Then I think after a long time, embargo has been lifted, which would lead to a higher growth in the unsecured loans. And that is definitely going to help Kotak Bank. So that is one bank which we are liking. Axis is another bank. I think they've taken most of the pain. In fact, they are at the forefront of provisioning, at least in the last few years we have seen. So our sense is that bulk of the pain is behind us. So from that perspective, I think this is one of the few banks which is going to deliver risk-adjusted growth with improvement in the balance sheet, with steady margins in the range of 3.6 to 3.8 odd percent. And since it has corrected, so now it is at a discount to its peers, and which is why I feel it should do well. Then I think within NBFCs, Bajaj Finance, clearly, I think growth is anticipated to be about 25%, ROAs of 4%. So I think this is one NBFC which does not surprise or negatively surprises on the growth side. And I think overall sense is that the current MD is going to be there, though not in a similar capacity. So overall continuity is also expected to be there. Then I think Shriram Finance is another where we feel that 16 to 18% kind of a growth is very much possible. ROAs are expected to sort of improve to 2.7 to 3 odd percent. And I think, yes, with lower cost of funds, this NBFC is also going to benefit.
Absolutely. I think Federal Bank also has come up with a new roadmap under the new leadership. So any highlights there?
Oh, yes, so they've come up with a strategic roadmap under new leadership. So what they are looking to become is among the top five private banks. They are willing to, or they are looking to sort of grow their balance sheet 1.5 times nominal GDP growth rate. So GDP growth rate is 10 odd percent. They are expecting to grow at about 15 odd percent. ROAs are again expected to be about, should improve, say from 1.2%, because the top three banks have ROAs of about 2.2 odd percent. And then ROEs are also expected to improve from say 13 to 16 odd percent. CASA deposit again overall expected to witness a jump, or the aspiration is to grow it from 30 to about 36 odd percent. So all in all, I think this bank has set a good aspiration for growth. And I think overall, since the MD has come from Kotak, so overall sense is that you will not, or the bank is going to sort of deliver on the expected lines, or there is a good amount of believability in that. So from that perspective, I think we have been liking Federal Bank with a target price of 225.
Absolutely. Let's talk about hotel sector as well. With I think with the recent budget, there were a lot of eyes have been focusing on hotels. So how have they been performing in general?
So I think overall, what sense you get is that we had just concluded Kumbh. Then I think the air travel data is also there, so that is also witnessing double-digit growth. Now, Q3 for most of the hotel companies, the revenues had grown at about 20 odd percent, and largely driven by about double-digit growth in RevPAR. And then the overall EBITDA margins have also seen an improvement. Now, sense is that that is going to continue in Q4 as well for these two reasons, because our sense is that they are going to get a benefit from one, higher number of wedding days, then Kumbh Mela creating opportunities for higher occupancies in, say, Prayagraj and neighboring towns. Then I think overall sense is that your overall passenger traffic data is good, so that is also going to sort of help. And I think most of these companies are now also banking on the fact that they are signing for a good number of management contracts. So, for example, Lemon Tree has signed for about 7 management contracts since January 2025, and they're scouting for newer locations. So, all in all, this is one space which can easily deliver double-digit kind of a growth. What we like is again tier one names like say Indian Hotels or ITC Hotels, which is one third of the size of Indian Hotels, but half of the size in terms of number of keys, or a budget hotel kind of a Lemon Tree, which has been sort of doing very well from a management signing contract as well.
Right. So I think while the entire market took a tumble this week, I think cables and wires industry also stood out somewhat because they fell even higher. So what could be the reason for this tumble?
So, see, Aditya Birla Group is pouring into a number of categories. So, paint is one of them. We have already seen paint companies witnessing pressure on margins because Aditya Birla Group is offering a discounting of about 12 to 15 odd percent for their paint business. and they would want to repeat something similar in the wire and cable business. Now, in wire and cable, it will be done through UltraTech. So UltraTech announced overall capex of about 1,800 odd crores for the next 2 years. Now, this category grows at about, or has grown at about 13 odd percent in the last 5 years, and likely to do well. Now, when a new player like UltraTech enters, obviously the kind of fear one had in paints will also probably come in a wire and cable segment, and which is why it is possible that UltraTech might offer cheaper versions or might take margin cuts to sort of push their products, and which means that there will be pressure or the industry is going to compete on the prices. And what you really saw was about 20% kind of a cut in some of the stocks. But it looks like, given the rich valuations, a lot of these stocks were sitting on, like in paints, some of these stocks will witness more of a time correction, if not price correction from current levels. Price correction is also very much possible given the fact that the overall market is sort of trending down. But yes, UltraTech's entry is not does not really bode well for the rest of the players. And probably it's not really great strategy for UltraTech as well, because see, in wire and cable, you can't really use the same distribution network. You will need to sort of build brands. In that process, you need to offer higher discounts and yet garner decent margins. I think ITC, while it has been sort of trying to compete with HUL, but they have not been able to sort of make the kind of margins what HUL does. But yes, it does impact the market. So I think, which is why this segment is going to witness both time and price correction for some time.
Absolutely. Sir, I think another news was wherein KKR is entering into an agreement with HCG to acquire some stake. How do we look at this?
So what we feel is that this is a very interesting development because see, when you look at hospital as a space, you have two large caps. One is Apollo Hospitals and the other one is Max Healthcare. And both these companies recently had a market cap in excess of 1 lakh crores. Now, Max Health, so KKR was an early investor in Max Healthcare, and they made about 5x kind of a return in the past 5 years, and they've exited. Now, I think they are entering into a company called Healthcare Global. So they're acquiring 54% kind of a stake for about 500 odd crores. The existing promoter will take the role of a non-executive chairman. So largely the management is going to be driven by KKR. And our sense is that, see, this company is well placed in the oncology space. And our sense is that with KKR coming in, the kind of scalability what they require, I think, or the depth they require, probably KKR might be able to provide. I'm not saying that KKR might be able to repeat, but obviously the potentials are there to sort of this segment to sort of do very well, or this company to do well, and which is why I feel that this company looks good from a longish perspective. We've come up with a buy rating with a target price of about 620.
Absolutely. Well, that was it for this week. Thank you so much, Pankaj sir, for your insights. And thank you so much, everyone, for watching. If you have any questions, please put them down in the comments and we'll get back to you. Thank you again for watching.
Investment in securities market are subject to market risk. Read all the related documents carefully before investing.